Yes, Morton Steakhouse. Let me order 1 filet mignon, 1 lobster, 1 crab. Hi, Domino's Pizza. I'm actually not calling to place a pizza order. I was just curious, do you guys have any job openings right now? You do? No, I can't really flip pizzas, but damn, I can flip some flapjacks.
Oh my word, it is like Red Dead Redemption out there in the stock market today, guys. So many stocks are red. We got a disastrous stock market today. We got so much to talk about in today's video. So many different stocks to talk about. So many different scenarios to talk about here. Just get ready, strap on your seatbelt, and let's get into this, guys. So first off, let's look at what happened in the overall market today. Absolute disaster zone. Dow down around 800 points today, okay? You don't see these type of days very often. Almost 800 points, especially on a day when no big economic news came out. S&P 500 down over 3.2%. The NASDAQ approached a 4% downward move today. That is ridiculous, okay? I think it's quite funny what some of the media was saying out there. Oh, rising fears of an economic slowdown. That is hilarious, okay? Nothing changed from yesterday to today about the economy, okay? No numbers were released. Nothing at all changed from yesterday, from today, except one thing. And that was last night after the bell, Cirrus Logic came out and said the Apple numbers are very weak. I came in, covered this on the channel. That is truly why the market was down so big today. Apple is such a massive weight on the market that when it has a really bad day, as it did today, it brings down the entire stock market. It brings down a massive amount of semiconductor companies because almost every single semiconductor company out there does at least some sort of their business with Apple, if not a ton of their business, because it's just such a big company. And when Apple's really bad, the whole market feels it and the whole market gets scared, okay? And if we look here today, look at Apple stock. It was down nearly 4.5%. So it actually, performed even worse than what the market went down. And this is just some of the Apple suppliers out there. We're going to see that a ton of them were down very big. The most interesting thing that almost made me giggle was Cirrus Logic, the one that actually was the one that came out with the bad news and whatnot. There was just one stock that was down the least. It didn't even go down as much as the stock market went down. It went down about 1.8%, while everybody else just got absolutely destroyed today, okay? So if we're looking for the reason why the stock market went down so big, it was that news that we just got, that proof that, man, Apple numbers are going to be really bad for this year, at least as far as the iPhone part of the business. Apple Watch should be strong, iPad should be strong, Mac should be strong, but as far as iPhone, there's no way they're going to sell as many units this year as they did last year. There's just no way possible with everything that we've gotten out there, all the rumors we heard about from unnamed sources, and then we get the company that's more reliant on Apple than anybody out there come out and say, hey man, the high end of the smartphone market is weak right now, okay? Now, if I look at all the different stocks my wife and I own, I find one stock that happens to be green, one stock that actually didn't get destroyed today, and it was Tesla stock. The one stock that even on an absolutely awful day today, Tesla stock was up. And it makes me wonder, if we were actually in a good market right now and the market wasn't such a disaster zone like it's been the last few months, what would Tesla stock be right now? Would this be a stock that's $400, $450, $500? Like, you look at how well it's holding up at nearly $360 up on a day when everything is down across the board. It's just amazing, guys. It's amazing the way Tesla's performing. I think a lot of investors are just really starting, a lot of big fund managers, okay, let me be specific. A lot of retail investors, I think, have understood, for months or maybe even years, the opportunity Tesla has. I think a lot of fund managers are waking up to it now that they're starting to see these numbers that Model 3 is putting out, okay? FANG stock. So FANG stocks shed up around $140 billion here today, all right? That, stocks like FANG are Facebook, Apple, Amazon, Netflix, Google. Those are the FANG stocks, all right? Facebook, that lost around $7.6 billion of market value today. Amazon was the biggest, loser of the bunch, I guess you can say today. Lost nearly $51 billion in market value just here today. Apple dropped around $38.5 billion in market cap today. Alphabet, Google McDougal fell almost as much as Apple, which is crazy because it actually fell more in percent, which is insane because the bad news that really came out last night was really in regards to Apple, but it just helped bring down these entire markets here today, all right? Now I just want to welcome the bank stocks to the bear market, okay? Bank stocks fell the most since June of 2016, and they enter a bear market finally. The bank stocks finally get to feel what we all have been feeling, that it's just a bear market out there. The market's just been ugly, and like we've talked about many times on the channel, many stocks are down 30, 40, 50, 60% from their highs they hit at the beginning of 2018. It's just been an ugly last 6 to 9 months in the market, and some industries hadn't felt it as hard, banking being one of them, but even banking now at this point is starting to fall big time. If we look at the banking stocks here today, you're going to see that just a gauntlet of them were down big, okay? Morgan Stanley was down 5+%. Goldman Sachs on the investment banking side was down nearly 4%. Wells Fargo was down 4.5%. JP Morgan down around 4.5%. Bank of America down around 5.5%. Just, an ugly day out there in the banking stocks, all right? Now, some fund managers, what do they love to flood to? Well, they love to flood to those stocks, the Coca-Colas and Pepsis and Procter & Gamble's. They love to flood to some of those stocks in these volatile times, but also they love to flood to the utility stocks, and utility closed at 283, all right? Their highest close since December of 2017 on a 52-week intraday high basis. Utilities are the only positive S&P 500 sector out there, okay? So that is very interesting. Whenever you have this volatility, this negativity out there, and fund managers love to flood to some of the safety plays, and they look at utilities as one of those things that is just a safety play, all right? Then we have this come out, okay, UPS, FedEx shares fall into the bear market. Welcome UPS and FedEx into the bear market, okay? We want to welcome you guys. As Morgan Stanley sees rising competition from Amazon Air, okay? The fact that UPS and FedEx have fallen so much has literally zero to do with Amazon, okay? Now, could Amazon become a major, threat out there, I guess you can say, to UPS and FedEx someday? It could happen, okay? But if you're looking at the stock prices of FedEx and UPS, the reason those stocks have fallen, especially lately, and have fallen so much and fallen into like a bear market territory, is because those stocks, if everybody's worried about, we might have a global, a global meltdown or just a global slowdown, right? Well, guess what? Package deliveries and whatnot, people maybe stop ordering as much stuff, and that freaks everybody out, okay? And who does that end up hurting? It hurts companies like FedEx and UPS in the end, okay? It makes them much less profitable if those planes aren't loaded, if those trucks aren't loaded with packages, all right? So from that perspective, the fact that those stocks have moved down has like zero to do with Amazon, and has 100% to do with the fact that the market was just down massively today. By the way, Amazon lost the most market cap of any company in the entire stock market today, okay? Now, if we look at, I keep track of around 80 or 85 stocks on a daily basis. If I look at the worst performers that I keep track of, none of these 6 stocks I own, but these were the 6 worst performers, I'm going to see some trends here, okay? Right off the top, Square, down nearly 12%. That one is just a really volatile play, okay? That one can just be flying up and flying down. That one's just a volatile play. But if we look here, 3 of these 6 stocks that were the worst performers I tracked were all kind of related, okay? I noticed that AMD, MU, and NVIDIA, these 3 stocks tend to trade together. If it's really great, all these stocks tend to rise, with each other, and if things are really bad, they tend to all fall big time. And if you look at AMD stock down nearly around 11% today, okay? Micron, which is a huge memory play maker, they were down around 8% today. NVIDIA down 6.7% today. All 3 of those stocks can kind of trade in the same basket, and they seem to just move up or down big together. And honestly, the last 6+ months has just been down, all right? Wynn stock was another big downward mover, around 8% today. Whenever people start getting scared about in China, it just falls, and look at that, an 8% downward move today. Caterpillar, that's also a big play for China. They look at that as a Chinese play, obviously. A huge business here in the United States of America, huge business out in Europe, but a lot of people look at China, and if China's slowing down, maybe they aren't ordering as much construction equipment and whatnot, all right? So those were all some 3 big downward movers there. Now, the one stock I tracked that performed the best of any stock, and this was amazing, was RH, okay? Restoration Hardware, which was up nearly 11%. Now, if the market wasn't so bad today, the stock could have been up 20+%, because that's what it was up after hours, okay? Restoration Hardware, for those of you guys who do not know, they sell the most expensive furniture you ever seen in your life, okay? We're talking about like $10,000, $15,000 $4,000 for like a couch, okay? For like $3,000 to $4,000 for like a chair, okay? We're talking like $10,000 plus for a dining set, like ridiculous pricing, okay? Now, RH gained more than 10% on Tuesday, even though the indexes were down huge. The home furnishing retailer managed to stick out from the pack thanks to strong earnings result and guidance. Restoration Hardware posted earnings of $1.73 per share, crushing the Zacks consensus estimate of $1.27. That's a massive beat there, and improving 66% from a year ago period. This performance also exceeded RH's own guidance range of $1.15 to $1.33. So it was just a massive beat. Adjusted revenues for the quarter came in at $638 million, up 8% from the year ago period. This also beat the analyst expectations of around $633 million. RH's comparable brand revenue comps increased 4% year over year. This is especially interesting given the comparable quarter saw comp growth of 6%. Okay, those are great numbers out of RH, and like I said, like RH is really a play on the high end, okay? You're really talking about the people that buy RH furniture are really the top 10% of the population, really mostly like the top 1%, because it's just so, it's like you buy a couch and it's like the price of a very nice car. Like, it's ridiculous, guys. Now, as far as what the CEO had to say, he said, while the luxury housing market has sequentially slowed throughout 2018, our revenues have sequentially accelerated despite cycling inventory reduction efforts and managing the business with a bias for earnings growth versus revenue growth, clearly demonstrating our ability to gain market share, the company said in a press release. That is amazing, okay? The one stock that really stuck out today. So the question is, what now? What now? What are we looking at in the stock market, all right? By the way, the market is closed tomorrow, just so you guys know, but the market will reopen on Thursday, okay? So first off, in the trade war video I put out a couple days ago, I said to you guys, the thing is about the whole trade war situation is that was just a pause on things. That was just simply a pause, and it was like one of those things that like maybe people could get excited very short term, but then the story becomes, oh my gosh, can they actually get a deal done? Until we get an actually concrete deal done, between China and the USA, everybody's going to be worried about, oh my gosh, maybe in 3 or 4 months, all of a sudden the tariffs are going to go to 25%. So it's not letting anybody really sleep much better at night. It's a little bit of a reprieve in the sense of at least things are working in the right direction. At least both sides are a little bit committed to this. That's the good news. The bad news is we still have no deal done, okay? We still have no deal done, and the tariffs could go to 25% starting on March 31st if nothing gets done there, okay? So that is still scaring people, and it's like, kick the can down the road. We got to get this solved eventually, all right? Now, there's definitely some people making still a lot of money in the stock market. Look at some of these options I'm going to show you guys here. This is Square today, okay? Square put options, some of these that are expired on this upcoming Friday, we're up between 1,000 and 2,000 plus % here today. Some people are making very small bets, not risking the farm on these type of options, but very small bets on some of these very volatile plays, because the name of the game right now is just volatility. These stocks are moving up and down, huge, and especially down, right? And so a lot of people are just kind of nibbling out there on some of these put options and not risking the farm, not risking a lot of capital, and they're making an absolute fortune, okay? If we look at Micron today, some put options there were up 900%, 1,100%, 890%, 718%. This is in a one-day span, okay? If you look at some of the NVIDIA options, we're talking about, 800% gains, 1,000% gains, 2,000+% gains in put options in NVIDIA, guys. Some of these gains are absolutely ridiculous. I challenge you, if you don't understand options, if you don't know options, I got a full course linked in the description. I think it's well worth you at least checking that out and learning about options and seeing if that's something that interests you. I go through a ton of different strategies in there, like a million different strategies that you can do and to hedge positions and whatnot. If you're interested in that, that's linked down there. So anyways, guys, we shall see what happens. It's just going to continue to be a volatile market here in the short term. Until something gets done on the trade front, that's actually a concrete thing, like we get it fixed, we're just going to be in a volatility game, and that's just the name of the game right now. If you're a long-term buyer, a lot of good deals out there. If you're a short-term trader, maybe you can be making money. But if I'm doing anything short-term, it's just playing short-term put options, very little amounts of money here and there. Because when you hit so big. You're hitting 1,000% gain, a 2,000% gain in a day, and that can pay for so many losses. Like you place $100 $100 bet on one of these, right? You make 2,000% gain. All of a sudden now you can lose like 18, 20 times if you were to actually lose that many times on some of these plays. So a lot of people are building a lot of money out there with options right now. Thank you for watching and have a great day.